welcome back to our show. Ryan Leopold joins us. It's Monday. We're going to talk mortgages, because that's typically what we do on Monday, isn't it, Ryan?
It is, man.
Well, Ryan, first of all, I got to say Happy New Year. And then second, are you a New Year's resolution guy?
I'm a big New Year's resolution guy, and Happy New Year to you as well. I've kind of noticed over the last couple of years, though, that my problem is I kind of put too much out there. I'm a little more too thorough and organized. I put like 15 of them out there, and none of them get done. So we're simplifying that this year.
You are. What is your simplified New Year's resolution, if you don't mind?
Well, thanks for asking, Ben. We're just jumping right into that. All right.
You posted it on Facebook for the world to see. So
I am, and I'm doing it. So basically, what I'm doing is doing a blog for the next 90 days. Every day, doing a video blog, all basically geared towards health and nutrition and fitness. And my wife and I watched several of the documentaries over the breaks, like Food Matters, Food Inc., Super Size Me. Those movies, it was really enlightening to learn all the information of how diet is really viewed and all the things we all neglect. And what are you doing? Distracting. And with all the things we neglect, and how to get focused on that and kind of cure myself from the inside out. So I'm excited. So I'm focusing on that, and I'm going to basically
blog.
I'm going to blog every day the foods I eat and kind of the process I go through to feel better and to change the foods I eat and the workouts and other habits.
Wow.
Yeah, so I'm pretty excited.
We'll talk to you again in 90 days. Ryan, outside of your newfound food blog and nutrition blog, which I'm sure it'll be really interesting to follow.
I have no idea what the blog site is. I have no idea how to tell you what the website is or the URL.
That's right. You can find it right on Facebook, I'm sure.
Yes.
But Ryan, on a more serious note, a lot of people in the mortgage arena tend to feel like, they'll go, they get pre-approved, and with it being the new year, a lot of people, New Year's resolution might be to buy a house. It might be to finally pull the trigger and get out there and purchase a home. And kind of that first step that we always recommend is getting pre-approved. Mm-hmm. But what the real key, I think, that you want to talk about here is that pre-approval is not necessarily the money in your pocket, is it?
And sometimes the misconception can be, even though pre-approvals and going through the mortgage process is more challenging today than it's been in the past, but kind of getting to the point of getting pre-approved, if you have all your ducks in a row from day one, is that really not that challenging. The biggest challenge, especially when we're in a tough housing market that we're in with not a lot of inventory and a lot of buyers in the marketplace, is you may not find that house for 2 or 3 to 6 months. The key is to making sure that approval that you got on day 1 is still available on day 90 when you're actually going to make that offer and the house under contract.
Or whatever.
Yeah, and there's a lot of things that can go wrong throughout from day 1 through 180 that people just don't think about every day. And even if a lender is clear with them from the beginning, like, don't do these things, there's just so much information, especially a new buyer is grasping and being educated on, that they may just glaze over these and thinking they're really not as important as they are.
So let's dive into a few of these.
Yeah, so I've been doing this business for about 14 years, and I've noticed there's 8 common things that buyers can do to basically get themselves unapproved from the day they meet with us to the day they close on a loan. Number one, and this one seems shouldn't be that big, but it is. People buying a new car or getting basically a new lease, okay? Like Dave was talking about on credit, is that if you buy something else and you open up a new trade line, that has the ability to affect your credit scores at periods of time, and it's also adding a liability in a lot of cases. So buying a car and not really talking to your lender about that before you do it can have a huge impact.
The other interesting piece of that is people are going out, and a lot of people will go buy their house, and so they're taking on a new debt, and then they feel like, well, we got to have the new car with the new house, which from a lender's standpoint can start feeling like they're really stretching themselves.
It is, it's either A, like I said before, it's either A, going to affect their credit score, or B, it's going to add a liability that was not there before.
A monthly liability.
A monthly liability. So they think they're pre-approved, and they think whatever they do moving forward is not going to matter because I'm pre-approved, but it does matter. And you add a $300 or $400 car payment on there, it could affect how much. Yeah, it could affect your ability to be approved for what you were approved for.
Mm-hmm. Number two.
So we see this a lot, and this one that's a little bit more challenging to grasp our hands around, which is a change of job. Okay, so either it's a change of job. The things that will not work is changing industries. That's a big one. Okay, or going from like a salaried position to a commission-only position, or a job where a majority of your income is based on commission. Those are huge red flags that could affect your approval. But simply changing a job, a lot of lenders these days need at least 30 days worth of pay stubs. So even if you go somewhat of a lateral position to a new job, you always need 30 days of pay stubs by the time you close. So if you're changing jobs and thinking you're going to close next week on your loan, just know that that's not going to happen in most cases. Okay, so that's number 2. Kind of already said it before, but don't switch from a salary job to either a high commission job, or in some cases being self-employed. You've been at Microsoft for 10 years and now you want to start your own business. You can't just go and start a new business and open that business license up and think that's going to be looked at as the same way as your W-2 job at Microsoft did.
And similar, as David was saying earlier, that's exactly where, from a residential mortgage standpoint, they look at 2 to 3 years history too, just like they do on a business loan.
Absolutely, and that's a huge one. So yeah, you have to have at least 2 to 3 years of self-employment income, proven income, to qualify for a mortgage. Here's another big one. Don't transfer large sums of money between bank accounts. So everything on the mortgage side is very paper heavy these days, and you have to document where every dollar is and how it's going to be involved in the transaction. So if you start moving it from 401ks or IRAs into savings, or from one savings account to another account, or what happens a lot of times is they'll put money from a savings account to a mutual fund because it's giving a slightly higher interest rate. And that's just, it's tough to follow sometimes. And again, we have to paper trail everything. So just don't do it without talking to your lender first. Another thing on the credit side, don't forget to pay your bills. Even things that may be in dispute, what you don't want to see happen is dispute a late fee on a credit card or a collection, and then have that affect your credit score 2 or 3 months down the road, where maybe today your credit's fine. Down the road, we don't want you to not pay those bills because you think they're wrong or in dispute. Again, that's another good one to talk to your lender about. Number 6, don't open any new credit cards or any other major lines of credit. That's a big one, because lenders, like David said, on credit scores, you don't want to open new accounts.
There's a lot of this that is just don't change anything. And I know people have asked me, well, how long is a pre-approval good for? Yeah. And I'll say, until you change something. So if you change something after you leave this office, it's no longer good. If your credit score goes down, it's no longer good. If you go buy a car in 20 minutes, your pre-approval letter was good for 19.
Perfect. Yeah, absolutely.
Until something changes. And in the same breath, if everything stays the same for 4 years and nothing changes, well, that pre-approval letter is probably good for 4 years. But people put this real false 90-day timeline in it, which is just a ridiculous number because it's completely inaccurate.
Absolutely. And all these little things are small, seem like small changes, but they actually can have a huge impact on your ability to have that mortgage waiting for you in the time when it's time to close on the loan. And the last couple, again, is a lot of people get gifts from family members for a down payment. That's great, and in most cases, that's going to be okay. But we have to make sure you fill out the proper paperwork as you go through that process, and make sure that we paper trail how those funds get into your account if you want to use them as part of the transaction when you're going to do a mortgage. And the last one is, don't have any random undocumented deposits go into your account. And this could be anywhere from $150 to $15,000. We have to paper trail everything. So whether it's tips that you received because you work in the restaurant industry, whether it be money you won gambling, whether it be selling something, loans from friends that are putting back into your account, make sure that you document everything, and don't think that any undocumented random deposit is going to be okay, because lenders will call you out on it, and it will make the process tougher, and it could affect your approval.
Yeah, and again, I think going back to the initial part of the conversation, or I guess my monologue, is, you started looking at how easy it is to get started, right? Okay, yeah, I went and I got pre-approved. But now you have all these other additional items that, in order to get to the finish line of buying a house, that you still have to go through it. It's not just pre-approved, buy a house, done. It's pre-approved, now don't go screw it up. Now find a house. Now make sure the house is the right house. Now, and then find the right financing. But there's that period of, where you let people get a little bit of a slack in the rope and feel like they're going to be pre-approved, and then they go screw it up with one of these 8 ways.
Yeah, and we've talked about this for, the last 12 months of being on this show is stay engaged with your lender throughout the process. And that's going to have your best chance of making sure that approval is good from day one all the way to the day that you close on the loan, and make sure you don't do anything major without talking to your lender first.
I think that's a really big point, because some of these you actually you may potentially be able to go buy a car. But it depends on how much money you're making. I mean, there's some of these things you can do. But you just need to make sure, as you said, you're engaged with your lender, who's going to be giving you potentially $500,000 or more to go buy a house, and they want to make sure you can repay it. So if you are going to go do one of these things, if you feel the need to go do one of these things, if you have to, then certainly working with your lender to find out the best way or most appropriate way to do that, or even somebody like David to talk about, well, what could this do to my credit? There's so many balls in the air. It's tough sometimes to juggle.
Very true.
Ryan, thanks so much for joining us. We do have to go to break. Ryan Leopold with Cobalt Mortgage. We'll be right back with Heather Moore and our New Year's questions.